All right, so you know you can already use your IRA to invest in multifamily syndications, but did you know that you could be taxed inside your IRA? That's right, through something called the UBIT, the Unrelated Business Income Tax. It's a real doozy, and in this video, I'm going to show you why that's the case and how to avoid it. So with that, let's welcome my good friend Bronson Hill to the show here. And we're going to explore this together. Bronson, he's our Director of Investor Relations. How's it going, man?
It's going well, Michael. I really appreciate being a part of this conversation. I mean, this is something that comes up quite a bit when we talk with investors about, first of all, can I use my retirement funds? Is that even possible to use my retirement funds to invest in a deal? But then also, what is a self-directed IRA? What does that look like? And what do I do to set one up? So maybe, can you talk about some of the some of the problems or some of the challenges, in setting up a self-directed IRA, because there's a conversation around this that I think it has a lot of value.
Yeah, so the good news about self-directed IRAs is that you can have certain tax benefits, and there's oftentimes a lot of money in these IRAs because you've been contributing to these, your company is matching them, and so a lot of benefits. But there are several issues with them. Number one, they take some time to set up, often 1 to 2 weeks just to get the account set up, which isn't bad. The bad thing is that when there's an investment comes live, and as you knew, Bronson, our last investment filled up within 2 days, and the IRA investor is in a disadvantage because of how long the paperwork process takes, because the IRA custodian has to sign the paperwork, and that sometimes can take 5-6 days to get that done. And by then, the round is already filled up, and that's a really big problem because you can't sign your own documents. The second problem is that many of these IRA custodians do not accept ACH transactions. They insist on paper checks, and a lot of sponsors, operators like us, just don't do checks. It's too cumbersome. We just say, look, it's too much hassle. Something gets lost, and so we just don't do it. So if your IRA custodian does not accept paper checks, you may not be actually invest with an operator. The big one, though, is this UBIT tax I mentioned earlier, this Unrelated Business Income Tax. It affects specifically IRAs, and it specifically affects investments that are leveraged, that have some kind of debt or loan on it, which, of course, multifamily real estate has, which is a super benefit. But this part of the tax code actually taxes that portion of your profit that is leveraged. So let me give you an example. So let's say you make an investment, $50,000 investment, right? Minimum investment typically, and we double that in 5 to 6 years, and you have a $50,000 gain. So you have an 80% loan on this building, which means that 80% of that $50,000 gain is taxable. So you have a $35,000 taxable gain, and a 30% tax rate. What is that? You're paying like $12,000 on taxes. And I had to go through this myself about 15 years ago, and I had to literally get a tax ID from my IRA, file tax returns, pay penalties and interest for not having filed tax returns, and pay all these taxes in my IRA. I'm like, what in the world is this? Now, a lot of people don't know this, and we don't want to complicate matters when people come into our investments. So we say, okay, use your self-directed IRA custodian. Let's get the investment going, and then we will transfer that over to the solution to this problem. Bronson, are you ready for the solution for this problem?
I'm ready, Michael. I think you've definitely made a case for it. Nobody wants to go through kind of what you went through with paying or being subject to those taxes. So why don't you talk about, I know it's called a QRP. Would you just kind of give an intro to what that is and why someone would consider using that?
Yeah, it's actually I don't even know what it stands for, qualified retirement. It's a qualified retirement plan. It's really a solo 401k plan, a specialized solo 401k plan. And this retirement plan gets around all of these issues, meaning that you have checkbook control over the IRA, meaning you can sign your own documents. You do have to open up an account with a qualified financial institution, but these are institutions that act like banks. So you can have ACHs, wire transfers, so you can get money in and out quickly. You control the accounts, you sign your own paperwork, and it's beautiful, right? The only downside of the solo 401k, it's actually one of our partners calls it the EQRP. It's the qualified retirement plan. And we love working with those. I think the only downside of that, it costs some money to set up. It costs about $3,000 to set this plan up. But if it avoids $15,000+ in taxes, and if you invest more than $50,000, let's say you keep investing with the IRA over and over, you could easily pay tens of thousands of dollars in taxes. And so setting up the QRP now for three grand, that entirely avoids this UBIT. It's a different part of the tax code, and it literally avoids the entire UBIT process. And just as a bonus, you can actually borrow up to $50,000 from your qualified retirement account without paying any kind of interest or penalty. So you can use it for almost anything, really, without paying a penalty. So this is why we really love the QRP.
Absolutely. Yeah, no, I think that's a great conversation. I think that, I think the thing I love most about, I actually have one as well personally, but the ease of use. You literally can, buy alternative assets. You could buy gold and silver. You can wire money right away. There's no delay. Nobody else has to sign off on any paperwork. And then of course it avoids the UBIT, which is a huge costly thing. So there is somewhat of a cost to put it together, but once you have one, it really makes it much, much easier, much more doable to do deals. So Michael, can you just kind of finish up with what's the process of setting up a QRP and how do people move forward if they're interested in learning more?
Yeah, so the process is pretty simple. You just contact the provider, and they set up a phone call to ask you a few questions. There's a questionnaire, and then you get a document to sign via DocuSign, and then instructions to set up your account with a financial institution. And that's it. You're essentially done. It's very straightforward. I think the best way to do that is our partners called Total Financial Control. Damien Lupo is a founder of that and great friend of ours, and he actually has a free book he is making available from his website. You can get it at going to themichaelblank.com/QRP. So it's the Michael Blank, BLANK /QRP. We'll put it in the show notes down below as well. And you can actually get his book for free. They literally ship it to you for free. And it's a really short read, but it really goes into depth of what we talked about here. Fabulous tool. I would highly recommend that you do that right now while that's still fresh in your mind.
Michael, thanks so much for sharing what you shared about the QRP. We really feel like it's a very critical conversation. It's something that every passive investor should know. And we're really grateful for each of you to take the time to join us. So we'll see you on the next video.